got, you can't buy. It resides between my eyes. Walked through the fire, came out better on the other side. See, life's like a beach if you find the same. And right now, I feel like 100 grand.
You are listening to Inspired Insider with your host, Dr. Jeremy Wise.
Dr. Jeremy Wise here, founder of InspiredInsider.com, where I talk with inspirational entrepreneurs and leaders. And Fabrice, what I'm fascinated with by people who invest in companies, and people who have startups or investing in themselves and the companies. I remember I had Yuri Adoni, the author of Unstoppable Startup, and after spending 20 years in high tech, 12 years as a partner at Jerusalem Venture Partners, he wrote a book called The Unstoppable Startup. Check it out. He shares the secrets of Israel's incredible track record of success. And also, I want to talk about the Yossi Vardi. He talked about why he passed on investing in Waze. And I love asking VCs. It's interesting to see, even with the specific selection criteria, and we're going to talk about, Fabrice, your framework for important decisions and for selecting companies. No one's perfect. We all miss things. John Medved passed on Salesforce. Like, why? And so I love to hear why he passed on these things. And before I introduce you to today's amazing guest, this episode is brought to you by Rise 25, which I co-founded with my business partner, John Corcoran. At Rise 25, I talked to Fabrice in 2012. And he was featured on Mixergy, and I was doing work with Mixergy at the time. Now, all I do is I help businesses run and launch their podcasts. That's all I do. The number one thing in my life is relationships, and I'm always looking at a way to give to my best relationships. Podcasting is one of the best ways to profile thought leadership in companies and get their ideas out to the world. So if you have questions, you're thinking of starting a podcast in your business, email us, go to rise25.com, check out more. I am also going to give a shout out to Chad Rubin, who I will give credit for reconnecting us since 2012. Chad is a founder of Skubana, which is one of the most powerful operations platforms in e-commerce, and it helps sellers save time, money, and automate workflow. So you can check out Skubana.com. Fabrice Grinda, his founding partner at FJ Labs. He's an investor with more than 600 investments around the world. He's invested in Alibaba Group, Airbnb, Beepi, Fanduel, Dropbox, so many more. And this is probably outdated, Fabrice, but they've had over 300 million investment exits. And he was a co-founder and former CEO of Auckland, Zingy, and OLX. And Auckland was one of the 3 largest auction websites in Europe. Zingy was a mobile media startup, which grew to $200 million in revenue. And he was named also by Forbes as the #1 angel investor in 2018, measured by the number of investments and number of exits. Fabrice, thanks for joining me.
Thank you for having me.
Dude, that's what I was arguing. I'm like, on your podcast, and people could check out Playing with Unicorns where you do it. My argument for you is to have some guests on because, listen, I just covered your backstory. Now we could talk about whatever we want to talk about. And I'm going to talk about how Snoop Dogg, Wu-Tang Clan, and 50 Cent relate to your entrepreneurial journey. And you're laughing. But we will talk about your framework for decisions. Before we get into your framework, I want to go back a little bit and touch a little bit on that. So how does Snoop Dogg, Wu-Tang Clan, and 50 Cent relate to your journey as an entrepreneur?
So after my first startup kind of failed, it was like 2000, 2001, the internet bubble had exploded, and it looked like tech was not going to be a thing anymore. But I wanted to be a tech entrepreneur. I love tech. I didn't like the idea of having a boss, and I like creating something out of nothing. And I'm like, okay, the internet is going to be this small thing. It doesn't look like it's going to be big anymore, and probably won't make any money out of it. But frankly, it doesn't matter. I didn't get into this to make money. I did it because I loved it. And so I was like, okay, given the constraint of no capital being available, what type of company can I build really profitably and with profits, because I don't think I can raise capital, and can be successful in 2001. And I saw that around the world, ringtones were starting to become a thing. And in the US, there was really no ringtones were available because there was no messaging, there was no carrier billing. And so I'm like, okay, it's bigger in the rest of the world. There's a reason it shouldn't be big here. Let's try to make it a thing. Now, the issue, of course, is I came here and the phone companies were not interested. The music companies were not interested. And I needed to start getting the licenses for the content. And so it required creating relationships directly with artists. And, it's funny, is I was this like shy, introverted, 26-year-old kid who'd never like listened to music in my life, never bought a CD, and all of a sudden I had to start hanging out with like Snoop and Wu-Tang, ODB and Fitty and Eminem, etc. And but it was really, very, like kind of clash of cultures, but it proved very successful for both of us.
What did you say in those meetings? So you're with Snoop Dogg. You're with what do you give me an example? Like take me back to one of those meetings.
The problem is the argumentation is like, look, right now CD sales are declining because people want to buy singles on the equivalent of Apple iTunes, and at the same time, at that time, there's massive piracy. Now things like Spotify have increased the music market, but at that time, the CD market and the music sales were collapsing, and their revenues were collapsing. And I'm like, look, in the rest of the world, I'm seeing a trend where artists are making more money from ringtones than they are from actual music sales. And I'd like to try it in the US. I'm going to give you an advance and a share of the revenues on a go-forward basis. So the problem is most of them didn't really understand any of that. So it was more of like building enough rapport with them in order for them to trust me to be willing to do a deal, right? Like, so I remember, I think Snoop wanted to sign our contract at the Girls Gone Wild party in Mardi Gras in New Orleans, in the party where I think 2 days later he'd been on Jay Leno. He's like, I have forsaken the sins of my past. I no longer take drugs and whatever, cheat on my wife. And like 2 days later, he had like a 2-foot long, bong that he was like vaping on, like becoming ever more incoherent. I think I was like getting contact high from just sort of being around him. And so, but I think he was taking like a fun pleasure of like having, me around in that type of environment. But ultimately, signed the contract. I think at some point in the middle of the night, he would have signed anything. Hereby naming his future.
That's the strategy. Get someone to a Girls Gone Wine party, get them some drugs, get them the contract.
Except it was all his idea. I was just happy to get an electronic signature or something signed by fax, but it was fun. And even, and by the way, all that was like already years into the business of like trying to get things done. I mean, at first no one would even pick up the phone. The first deal we did though was with Wu-Tang. And Loud Records, and also that like these guys are like hardcore. You walk in their place and there's like guns and like drugs, etc. And it's like, whoa.
I'm trying to picture you in both of these scenarios, Fabrice. I mean, we're talking if people don't know your background, you go to Princeton. I don't know. It sounded like you didn't speak much English. I don't know, and you graduate summa cum laude in your class. So that's what we're talking about going into these Girls Gone Wild parties, right?
Yeah, no. And look, by the way, at that point in time, I'd worked 100 hours a week, 7 days a week. I don't think I'd even, and I was a very late bloomer when it came to like having friends, having a girlfriend, et cetera. Like by then, I'm sure I never had a girlfriend in my life. So I was too busy with like single-minded focus of like, trying to build something large. And I don't know, I had a sense of manifest destiny. And so everything else, like I put by the wayside. But I think it didn't matter. Like, I think what mattered to them was like authenticity. Is like, I was authentic, and A, wanting to make something out of this, and B, wanting them to do well. And despite the fundamental cultural clash and language differences, and by the way, it was my education as well, right? Like, I think the guys who Wu-Tang were like, look, we can't hang out with you. You're like lowering our street cred. We need to redress you. They gave me like their shirts, and like they really changed my wardrobe, and sunglasses and baggy pants, and it's fine. And at the end of the day, it's all fine. And you do what you need to do. It actually ended up being fun.
I'm curious. there's some good lessons here, though. How would you build rapport? Two totally different cultures. I mean, you're from France. You never listen to their music.
Yeah.
How did you go in and build rapport quickly with them?
Originally it didn't go directly to the artist, right? Like you went through either the lawyers or their manager or their record studio and by the way, finding a way in took forever. Like the there's no database that says who is managed by whom and et cetera, that it was readily accessible. But little by little, it started being known that, these singers work with these songwriters who are typically represented by these lawyers. And it took 2 or 3 years before any of this started happening, but like essentially reverse engineered a database of like music industry relationships so we could figure out and get all the copyright and build these relationships. And the thing is that the minute you start showing up with real money, which of course I didn't have at the beginning, but once the sales started going, I mean, we went from $1 million in sales in 2002 to 5 in 2003 to 50 in 2004 to 200 in 2005. Once revenue started becoming real, like for these people, like for Fitty, we might have been his largest source of income that year, like millions in dollars in revenues. And at that point in time, I became their best friend.
That's a good rapport. That's a good rapport builder. Sending $1 million. Yes.
Yeah, when you make people money, they like you. Sometimes the people I've described, like my venture fund as a cult. The difference is a cult where everyone becomes rich.
That's true. I want to, Fabrice, there's an awesome interviewer, Nardwar. I'm going to send you the interview that he does with Wu-Tang Clan. Just it's really amazing, his interview with them and Snoop Dogg, and he's interviewed all those people. But, at one point, we see what you've done now. There were points in time where it was just hard for you to make payroll, and, you had to eat ramen and you were on a very, very tight budget, and now not. And then you made a decision at a point in your life, this may have been right after we talked, to just minimize everything and just go with 50 items. What was important in those 50 items? So you sold everything, you kept 50 items, and then you just went in Airbnb, friends. What was essential in those 50 items?
Actually, let me answer the question in a slightly convoluted way. So
go ahead.
When I sold my company, and the first time I became reasonably well off was in 2004. And by that point in time, we were so busy growing so quickly. I mean, like 5 to 50 to 200 million revenues, like nothing changed. I sold the company for 80 million in like May or June 2004. I had over half the company. And so after taxes, I made like 26 million. I think I still lived in the same studio apartment for another, 4 years. What I bought myself that day was a tennis racket, an Xbox, and a TV. And that was it. And by the way, the most momentous point in my life at that point was actually not that day, was the day we became profitable. The day I no longer need to think through, are we going to survive or not? And I was able to pay back like the employee payroll that I had not paid in months, that I was able to pay back the debt on my credit cards, et cetera. And that was August 16, 2003. That was like the most important point in my life at that point. At that point in time, profitability, not the exit. The thing is, over time, so 2012 is when I made that decision. Okay, let's completely scale back. Let's go down to 50 items and let's not own any assets. And what led to that decision was, frankly, at that point I'm in my early 30s, and I've realized, or mid 30s, and I realized, my friendships are changing in nature as we're getting older. It feels that the depth of connection I had younger, because we could spend our time in college like remaking the world and thinking about ideas, or we didn't have any other obligations, we could see each other multiple times a week, have decreased in quality. Like, yes, because these were people that I'd known forever and were my best friends, I would still be friends with them. But if you only see them every 6 weeks, the meetings become biographical updates. It becomes in the last 6 weeks since I've last seen you, what has your husband been up to? What have your kids been up to? What has work like, et cetera. And it's not the reason we became friends in the first place. It's not bad, but it doesn't have, you're losing something. And I'm like, you know what? When you own things, especially real estate, it has a tendency to own you. Things break, things need maintenance, and also you don't think through, or because you have a default choice, you just do it. And you don't actually think through, okay, if I had all the choices available in the world, what would I really want to be doing? Where would I be going? So A, your choices are kind of preset and you don't actually think through them anymore. So you're no longer deliberate about your choices. Problem number one. Problem number two, your friendships are fraying because you're not allocating enough time to them and it's not just your fault, obviously, you're both mutually busy. And so I'm like, you know what, maybe if I go and just couch surf on my friends' places for the next few years, it'll be an amazing way to reconnect and to hang out with them and remake the world and rehab conversations that I really long forward to or long to have again. Now, of course, that failed, but and it led to a lot of other iterations, which I could just talk about later. But to answer your question on the 50 items, it was very easy. I wanted everything to fit in my carry-on suitcase because I hate checking luggage, and my tennis bag and my backpack. So my backpack had my electronics, which is my notebook, my iPad, my Kindle, my tennis bag and my tennis rackets, and then my suitcase had basically, 2 pairs of pants, 5 pairs of shirts, 5 shirts, one pair of tennis shoes, 1 pair of black shoes, and like a couple pairs of socks, underwear, and toiletries, and that was it. I mean, the reality is you don't need anything else. If you have enough for business, which these days is all business casual, don't have a tie or a suit or any of that stuff. I don't do black tie events. I think they're mind-numbingly boring and pointless. So if you don't have any casual wear, you just need, like, if you have business casual and then like sports stuff, you don't need anything else. And yes, I'm not necessarily cheating, but I'm counting old toiletries as one. But no, I think I had like 7 pairs of socks, 7 pairs, which is like 4 black, 3 tennis, or 4 tennis, 3 black, and like 7 pairs of underwear. That's 7. So you add it all up, it's sub 50. I mean, it's also limited by definition because it has to fit in my carry-on, in my backpack, in my tennis bag. And so everything I own fit in that. And because I travel around the world with it.
So I want to talk about selection criteria. I was doing research, and I don't know if this is still the case, but you and your company evaluate over 100 companies a week.
That's correct.
And so you have a certain, we'll talk about the framework for making decisions, but what is the selection criteria? Has it changed since COVID?
We have 4 key selection criteria, which have sub-heuristics, and they haven't really changed in the last 22 years, so they keep being refined. So number 1, do we like the team? Number 2, do we like the business? Number 3, do we like the deal terms? And number 4, does it meet our thesis of where the world is heading? But each of these needs more explanation because every VC in the world will tell you, I invest in extraordinary teams. The thing is, what does that mean? It can't just be, oh, I know it when I see it, like porn, the definition of porn.
How are you going through 100 companies a week?
Yeah. Exactly. And so for us, it means a team where the founder is both an extraordinary storyteller, because someone who has amazing storytelling skills is going to be able to raise money at a higher valuation, attract better talents, get better BD deals, get more PR. But that's not enough. If that's all you have, you may end up with Theranos, or you may end up with fab.com, hundreds of millions of revenues, but not profitable. So we also want, in the same CEO founder, someone who's extremely analytical, numbers-driven, thoughtful about the business they're in, understands their unit economics. And the thing is, if you only have that, you may build a small, profitable business, but only a small business. So we really want both the storytelling skills and the analytical framework in mind. And the Venn diagram of intersection of people that have both is actually rather small. And so that actually is rather limiting. But for us, that's not enough. Even if the team is extraordinary and they have everything like the grit, the tenacity, the passion, et cetera, we want the business to be attractive. And so for us, an attractive business is one where you can build a $1 billion valued at least $1 billion company, and by that metric, it excludes a lot of ideas that are going after that are too small, etc. But number 2, for us, and maybe foremost in that, is the business needs to have the potential to be profitable, which means we care deeply about unit economics. We want you to be able to recoup your customer acquisition costs after 6 months. We want you to 3x your customer acquisition costs after the first 18 months. Now, if you're not live yet, which happens with many of our companies, of course, we're very early stage investors, you still need to be able to articulate how much you're going to charge, what your margin's going to look like, how much it's going to cost you to acquire customers, how many customers do you think you can acquire for how much for, and you have thought it through. Many founders have not thought through these questions, and they're not right for us. By the way, some early stage investors will just back the team and they'll figure it out. We've decided no. We also want them to have thought through what the business is going to be, and if their economics are not there, they need to be able to articulate why they're going to get there and how they're going to get there. And it can't require a miracle. It can't be all the stars, the multiverse need to align for this to be work. It just needs to happen normally through scale. Number 3, the deal terms need to be fair in light of the size of the opportunity, the traction, and the team. So there is a set of expectations of what a pre-seed round looks like in the US, right? You're raising 1 million at 3 to 5 pre, or like 750K to $1 million. Like a seed round, you're raising 3 at like whatever 6 to 12 free. I mean, pretty big range, but at that point you're live and you're doing 30, 40K net revenues, net, not gross. So a marketplace doing 150K a month in GMV, taking 20%, it's 30K net revenues. For Series A, you're raising 7 at 5 to 10 at like 15 to 30 pre. But again, there's an expectation you're doing 100 or 200K in net revenues and so on and so forth. So you need to be in line with the average of the market. And if you're an amazing second-time founder, or if you're getting a lot of traction, these days you can command sometimes a much higher price. Your A looks like a B. And we have chosen to have the discipline not to do those deals because you're just not rewarded for the downside risk. And then last but not least, we're thesis driven. And by the way, the first 3 are collectively required. We need to like the team, the deal terms, and the business. If any of the 3 are not met, we don't invest. So they're collectively required. The 4th one is mostly required, but we're a little bit more flexible there, is does the idea meet our current thesis of where the world is and where the world is heading? And we have very specific thesis on the evolution of marketplaces, on the future of work, on the future of food, on the future of real estate, the future of lending that I come up with, frankly, through reading and interacting. And it's, and so what your idea needs to be in line with that thesis.
Well, I think a lot of that is cut up with COVID, right? I mean, we were talking a little bit about how COVID has changed. Maybe just talk about alcohol delivery. I mean, talk about one of the businesses you work with and what has happened since.
Yes. So in a way, COVID hasn't changed our evaluation criteria. Maybe the one thing I devoid in the COVID times is investing in things directly negatively affected by COVID. So tourism, travel, offline events. And if I look at my portfolio, though, 90% is doing better because of COVID, and maybe 30% is doing extraordinarily better. What crises do, so looking at a macro perspective here, what crises do is they accelerate underlying trends. And so if you look in the 20th century, actually, the biggest increase in productivity growth in the US came from the Great Depression in the 1930s, because necessity is the mother of invention. If you look at the most interesting defining companies of the last decade, they were all created in the 08-09 financial crisis. So Uber, Airbnb, Slack, WhatsApp, they all came out of that. And I suspect that the most interesting companies in the next decade either will have come of age during COVID or will have been created in the COVID area. Now, if I look at our portfolio, there's like 90% that's doing better than expected, frankly, and better than was even expected on the trend. But there's like 30% that's like completely crushing it, that like 5x. That's kind of everything in food delivery. So we're investors in Drizzly, which is an alcohol, Uber for alcohol, if you want. And they 6x from February to April and have continued to grow since. We're investors in Instacart. Instacart is a $5 billion a year last year grocery delivery startup. And once you reach that type of scale, $5 billion a year, the type of growth rates you expect are like 50% a year, 70% a year. And even then you'd be delighted. I mean, that's at scale, that's still massive growth. They 4x to 20 billion in a year. I mean, that's insane at that level of scale. And so COVID has fundamentally accelerated the penetration of e-commerce, the penetration of food delivery, the penetration of remote work, the penetration of online schooling and online education, and the penetration of telemedicine, and actually also the penetration of online public services. education, public services, and medicine had barely started their transition to online before COVID hit. The number, in fact, it was illegal to actually have online, to have a Zoom doctor-patient call. I think a lot of like the HIPAA requirements were like made these illegal. But with COVID now, I think 25% of the US population is at a telemedicine call. I mean, that's gone from 0% to 25% in 6 months is insane. And so it's finally accelerated. And I think, frankly, for the better, the transition to online commerce and online service delivery for many, many categories.
Fabrice, obviously you are a big proponent of education and college. I'm curious of what you think this disruption is what's going to happen with colleges and universities with this whole online. I mean, people now, some universities, they're just on campus, but still taking virtual classes. What do you think is going to happen with the disruption of college or universities, or not?
So in the US, there's clearly been a trend. Well, so currently, of the people aged 25 or above in the US, about 35% of them go to college. And that's at 95%, 90% of the jobs kind of require a college degree. So it's actually not a complete imbalance. The issue is, in terms of value for money, the cost of college has increased dramatically in the US for over the last 40 years, much, much faster than inflation, to the point it's kind of becoming unaffordable or leaves people with a massive debt burden, which is an issue because then they can't take risks, they can't be entrepreneurial. And the value for money has been declining dramatically, with all of the value frankly being captured by the colleges and not being captured by the students. And that's true probably from colleges ranked 50 and above. And there are hundreds of colleges in the US. And so what I suspect will happen is the very top colleges are still great investments, and there's still great value for money, both in terms of the relationships you make and the learnings you have. So the Princetons, Harvards, Stanfords, Columbias of the world are still going to continue to do very well, and if you can get in, it will be amazing. And the specialty vertical learning experiences that you can get, like Lambda School for like learning to code, et cetera, will also do well. But like the less expensive, high quality community colleges or colleges that are just priced right will still do well. But the overpriced, $100,000 a year education for something that doesn't really deliver probably will a lot of those colleges will die, and frankly it's not for the worse. They're overpriced relative to what you get for it. And I like that there's in a way there's democratization happening with online education, because if you don't need the credentialing, you can actually learn kind of anything on Coursera from the very best teachers in the world. In K through 12, Khan Academy, which is a non-for-profit, is extraordinary. Whenever I need to help my girlfriend's daughter with math homework, I go to Khan Academy and I just go learn the concept. And the quality is extraordinary. So the amount of things you can learn online, especially and the reskilling that's available, is mind-boggling. And look, there's been, beyond the fact that college education, especially for the middle quality colleges, is not great, and it doesn't create the skills you need for the modern workforce, I think you can complement a lot of that with what you can learn online today. I mean, clearly, and by the way, K through 12, we're also not teaching the right things. Like, it's crazy to me that we're not everyone. That first of all, we're not teaching people to do financial planning, to do their taxes, to have like
real life skills.
Yeah. I mean, again, I do like a liberal arts education. Don't get me wrong. I think I loved learning about the Peloponnesian War and the Roman Empire and East Asian studies and learning Mandarin, et cetera. And I think having curiosity and learning to learn is an extraordinary skill to have, and it makes for more interesting people. But I think there's no reason, especially in K through 12, especially in high school, teaching people the basics of personal finance and saving and paying taxes and et cetera to me makes a lot of sense. And at the very least, showing people online how to learn. You can learn YouTube has become this extraordinary repository of learning information. Like, when I want to learn a new skill, I go to YouTube and look at a million videos, and I do it for everything from improving at different components or subcomponents of my tennis game to how to create my Playing with Unicorns live streaming show, to whatever. Everything's online and available to learn if you have the curiosity for it.
Talk about, you mentioned something in a crisis. It accelerates things where they're already going. And I'm curious to talk maybe about a recent investment that FJ Labs made. What would be an interesting example of late that came across your desk and you as a company decided to actually move forward with?
Give you a few examples, or one example. So I have this thesis on the future of food and this thesis on the future of work, and then a few theses on marketplaces. So future of work for me is like today, most people are doing a job they don't like to do, like, or at least the job they signed up to do is only a small percentage of their time allocation. So if you're a hairdresser, you want to cut hair, but you start a studio and all of a sudden you're like doing accounting and hiring people and negotiating a lease and 90% of your time you're finding for customers, you're doing online acquisition, you're answering comments at Yelp. 90% of your work becomes not the work you like to do. And so the future of work for me is one where people will be able to do the job they love and everything else will be done for them. In the future of food, and I'm going to cross a few of these for one specific investment we've made that I really love. In the future of food, today, very few people order food online. The reason you don't order food online is it's low quality. It's like only junk food, essentially. It often arrives late and it's expensive. It's more expensive than if you cook it for yourself. So if you want a high quality, healthy, organic meal, you make it yourself. But that's because the cost structure, the delivery infrastructure is high right now. It's the restaurants that are cooking these meals, and they have like rent and people, et cetera. But imagine a future where all the real estate your meals were made for delivery is in dark kitchen, so it's tiny, super efficient. They're using automation, both of their processes and robots to make the meals very quickly, very inexpensively. And you can have any meal you want, from keto to vegan or whatever. And because of density and autonomy, you have the low delivery fees or free delivery fees. Then I can imagine a world, and it's going to take 10 years, where you can have essentially infinite high quality, if you want it, variety of foods that's cheaper to buy than to make for yourself, and that's delivered to your door hot in 15 minutes, right? In that world, I think over half the food is ordered online. And so that suggests that we're only at the very beginning of the food revolution. By the way, it entails a lot of changes on supply chain, infrastructure, robots, dark kitchen providers, brands built on top of them, and that even the big war between Uber Eats, DoorDash, and Seamless Grubhub is only at the very beginning, because it can 10x from where they are. And number three, when it comes to marketplaces, I've been looking at a lot of models where the multi-category sites are being verticalized. And so one investment we made, which by the way no one believed in originally, is a company called Chowbus. Chowbus is a Chinese food delivery company. And people were like, wait a minute, I can order Chinese food on Seamless Grubhub or Uber Eats. Why would I invest in this? Other VCs were very skeptical. The founders also didn't speak English particularly well, and mostly Mandarin speakers. But they had a lot of insights, and they're like, look, the owners of these Chinese stores, they don't speak English either particularly well. They're mostly running this pen and paper, and they want to be cooking food and providing an amazing experience locally. They don't want to be picking up the phone and creating online websites and negotiating with Uber Eats and answering comments in Yelp and TripAdvisor. We'll do all of that for them, and we're gonna
and they speak their language.
And we speak Mandarin well, and we'll do it in English and in Mandarin, and we're gonna hack WeChat, not technically hack, but like use WeChat as a distribution channel to cater to customers who speak Mandarin, who are on WeChat, not on Facebook or on WhatsApp, and they were able to grow. I mean, when we invested, it was not that long ago. It was like a year ago. They were at $700K a month. By February, they were at $5 million a month, and I think now they're like, they might be nearing 20 million a month. I mean, and no other VC thought, oh, this makes sense, to verticalize food, because they didn't. But for us, it was really like, oh, cross the future of work, where the owners of those Chinese restaurants only really want to be cooking food and not do anything else, and we do that for them. The future of food, where everyone's going to be able to order on food online if you can find a way to make it inexpensive and affordable and high quality. And then like very innovative strategy at the marketing side, and the company completely exploded. And so it was one of our, not contrarian from our perspective, but relative to what other people thought, contrarian. Now, of course, it's become it's become standard. Like they just raised around at like a high valuation, raised lots of money. So now other people are seeing it. And by the way, we did the same thing for Slice, a pizza food ordering company, which is also absolutely crushing it.
How do you spell the first one? Chow.
Chowbus, CHOWBUS.
Awesome.
And Slice, like a pizza
Love
slice.
It. So Fabrice, talk about, one of the biggest exits. And then I want to talk on the flip side, a big miss that maybe, when you're evaluating 100 plus companies a week, you're going to miss for whatever reason, and maybe it doesn't fit in your criteria, but biggest exits that maybe it could be biggest exit that's unexpected. That was kind of from other people's perspective, that was unexpected, not from yours. What are some, maybe like a cool, interesting big exit?
Well, the craziest exit is one that's completely random, completely unexpected from my perspective. We haven't invested too much in Turkey since Erdogan became president. And we don't invest in gaming, we invest in marketplaces. But we had this new analyst who came in from Booth, and he just started at FJ Labs. He's like, hey, I know this amazing team from Booth. They're building this like game studio in Turkey. Can we invest whatever, 50K? And I'm like, gaming, which we don't do because it's hit driven. It doesn't have the same network effects. It's Turkey, and that's pre-Erdogan becoming president. But we'd already started seeing the macro tea leaves are declining it. And their thesis was, we're going to create Clash of Clans types games, and of course, Supercell, which is the maker of Clash of Clans, by far the most successful gaming company of all times in mobile. Bought for $10 billion by Tencent, crushing it. And at that time, they were only in iOS and only in the West. So the thesis was, we're going to make it the Clash of Clans times games for Android and emerging markets. Now, didn't take, a rocket scientist to figure out that eventually Supercell was going to launch their own games in Android and emerging markets. And perhaps worse, our games did okay, but none of them did really well. And so 2 years in, it looked like we were going to shut down the company. It didn't make sense. We're in that problem. Nothing was cutting it. And so I think I'd signed the liquidation docs to close the company down. And in 24 hours, one of their engineers built this casual fun game, 1010. It's kind of like, or 3. It's kind of this math game. I don't know if you remember 2048, 2, 4, 8, 16. I don't know if you ever played it and you had to get to 2048. Okay. So super casual numbers game on mobile. They built in 24 hours. Released it like the day before shut down the company. Instant global sensation, super hit. Got an advance from Apple so we could make payroll, not shut down the company. And we're like, hey, instead of making these complex games where you need storytelling, voiceover, like millions of development, let's just focus on building these casual games. And they became really good at making casual games, complete turnaround. The company grew to tens of millions of profits per year. Profits, not revenues, hundreds of millions of revenues. And ultimately, Zynga bought it for $250 million plus a big earnout. And they've been crushing the earnout. And so what turned out to be a 50, by the way, on average, we invest like 500K. So what turned out to be a 50K investment, it's a tenth less than we usually invest. I think we got like 7 or 8 million out of this. It's like 130X. A company had essentially written off, completely off core, off thesis, made an investment as a favor or as like a show of support to an incoming analyst. It goes to show better lucky than good.
Totally.
Skill had nothing to do with this one.
Better lucky than good, exactly. Maybe that's the title of your next book.
Better lucky than good.
Better lucky than good.
I'd like to believe it's a counterexample. Most of what we've done has been.
Well, I think of this, Fabrice. Like even going back to the company that you had to continuously hustle to get payroll. There's luck involved. Like you were raising $5,000 at a time to like continuously get the company going. So yes, like it's sort of a tongue-in-cheek example, but there's luck involved in that. Like you had to
what if I didn't find the 10K that month, right? Yeah. Like too many months in a row. Yeah. Absolutely. You have to work your ass off, but then you need to be in line with the market and history and luck. Absolutely. Yeah. No. Like I think very successful people underestimate the amount of luck play the role of luck in their life.
Yeah.
And by the way, luck at many levels, right? Luck that you're born with your grit and tenacity, luck that you're born with the IQ you have, luck that you're born in this time period where the things you're interested in are actually valued, luck that your parents allowed you to have the education and pursue the opportunities you had, luck that we're born in the West, right? Like my life would have been very different if I was born in Somalia. Or as a woman in Saudi Arabia, right? Like the opportunity. There's a lot of luck and that goes into our lives, even though you still need to work really hard to make the most of the opportunities given to you. And it's that intersection of like opportunity, work and luck that leads to these extraordinary successes. But they all are required.
Yeah. So we'll figure out the subhead later, but I'm still going with the headline, the title. Biggest misses. I mentioned in the front of the interview, it's interesting to hear not just what they missed on, but why they passed on it. What were some big misses looking back? Obviously hindsight's 2020.
I didn't miss them, and I'll tell you two that I would not have invested in.
Yeah.
That would have been the biggest messes ever, and they're core to my thesis on marketplaces. So I wouldn't have invested in Airbnb because they would have come and said, look, we're doing inflatable air mattresses in people's living rooms. And I would that's too small an addressable market size. And that's not that compelling. And I'm not sure I would have seen that could lead to other opportunities, which would be basically unlocking underutilized assets. And by the way, it's kind of obvious in hindsight that real estate is the highest asset class or the largest asset class there is for individual in terms of their wealth, and that finding a way to monetize it made a lot of sense. But that's not the way they pitched it. Right? They didn't say this is your high.
Right.
If they pitched it that way, I think I would have gotten it. But it was pitched as like, we're monetizing like excess inventory in your living room or in your couch, and that didn't seem that compelling, especially with like things like couch surfing not being able to monetize all that much. And Uber I would have missed as well because it started out as a rich guy problem, like lots. I need a better way to find a black car. And how big is that market, right? Like, and you needed the foresight to see that UberX and Uberpool that you could actually go from there to much larger markets. So they weren't offered to me, so I didn't miss them per se, but I would have missed them for sure, especially given my requirement on unit economics.
Give me an example. That you make a good point, Fabrice. Foresight. There's probably companies that you invested in because you had a foresight. They pitched one thing and you saw something else that was bigger. What would be an example of that?
Oh yeah. So Rebag, they came to me. They were called Trendly. They're trying to create a second-hand marketplace for luxury goods, but mostly focusing on dresses. And because the founder's great. He had been at HBS. He came kind of from my hometown in Nice or near Nice in France, and he had worked at Rent the Runway, and clearly his work at Rent the Runway, I think, colored his lenses. He's like, we should do the real kind of, but for except for dresses, and it just didn't work from an economic perspective because the average order value was like $200. Plus you needed models, and you had sizing issues, so it led to returns. And I said, look, I love you. I love the idea in general of using in general going to resale makes sense because it's more ecologically conscious. You also make it more affordable. I like luxury as a category, but it can't be dresses. And actually suggested they try. I told them to try a whole bunch of different products, of which one of them was handbags. And the company ultimately focused only on handbags. And that led the average order value to go from 200, I think now it's like 1,700. Wow. And now the company is on 100 million run rate and profitable or getting to profitability. And that's an insight that I had because I'd seen so many companies in adjacent categories, and I knew that what he was doing wouldn't work. But I thought what he was doing in general is perspective on luxury is a great market, and the having inventory in order to quality control makes sense. if you can find it, make the economics work, and I just didn't think it would work with dresses and with that low and average order value. So that one, I think I played a pivotal role in getting him. I don't think I don't think I told him specifically do just handbags, but I told him like find things
Try
that are more
something that
expensive.
works. Yeah, exactly.
Yeah.
Last two things, if we have time. So I want to talk about your framework for important decisions. And if we have time, I'd love to hear some of your all-time favorite books that people should recommend. We were talking about Loon Shots before we hit record, so people could check that out. But framework for the most important decisions. You've thought this through a bit.
So it feels to me that in life, there kind of is this default path that people are on. You know, you go to high school, then you go to college, then you get a job, then you get a girlfriend. Then not could be at the same time, but then you get married, then you get like 2 kids and a dog, and you keep going up the ranks.
It's like that insurance
ladder
commercial.
You're in. Yeah, and it keeps going. Well, I don't really watch TV, so I don't know what you're talking about, but it kind of follows that path, and people don't question the societal norms. Why is it that this is the path? And is it the right one for them? And I find that being deliberate and explicit about especially when you face very big decisions, and this could be personal, like do I get married to this person or not, or it could be professional, like these 2 different job options that are path that are really fundamentally incompatible with each other. If I go down one, I'm closing down the door to the other. How do you make these, evaluate these? And I created a 4-step framework for that, which is step 1, write down kind of stream of consciousness. But I guess my brain is kind of structured. Your current assessment of where you are in life, personally and professionally. Then 2, without putting any limits in terms of what is possible. So don't put any constraints. It's not because you didn't study whatever it's not because you don't have a PhD in medicine that you should prevent yourself from saying I want to go in biotech. By the way, I think you can learn anything if you really put your heart into it in kind of record time, in like 6 months, a year. If that's all you do, you can learn kind of anything. So not putting any constraints on yourself, all the things you think you would like to do. And then for each of these things, write down, imagine yourself a day in the life of 2 years down the line. So not the ideal day, but a normal day. And what are the pros and cons? What do you like or not like about this? Once you're done, and for me, these emails, and I do them every couple of years, have usually been 10 to 30,000 words. And the longest one is probably 50 to 100,000 words. So, I mean, it's long because I usually lay out a lot of options. So that's step 1. Step 2, I then share it with my best friends, advisors, and people I respect to get their perspective. And I ask them for 2 perspectives. What would you do if you were me? And what would you do if you were you? So I get that perspective, because usually when asking them that allows them to frame their perspective on me. Because if I just asked them, what would you do if you were me? Often they actually would tell me what they would do if they were them. So it's good if we really put themselves in my shoes, and often they still biased, but it's still fine. And usually through the course of a conversation, the information distills. Step 3, and that step most people don't take, is actually try a lot of things. Most people don't try enough things. They don't take enough risks. So for instance, after I talked to you in 2012, on my list of things I wanted to do, I had a list on professional, personal. My professional list, for instance, is like buy Craigslist and run Craigslist. That was one idea. Buy and or run. And I had and I tried that and it didn't work out. I was like, try to run part of Cuba. So I pitched the Castros and letting me run a special administrative zone in Cuba. It said like a free trade zone. I was like, I'm going to run 1,000 acres of the country for you, like special different rules there, because I thought it would be amazing. And frankly, they sucked so much from their economic perspective, but I didn't think I could fail. Now, I failed. They were interested in a free trade zone. I failed to convince them, so that kind of failed. I tried to buy eBay classifieds in 2015. That also kind of failed. I thought about becoming an economic commentator or public intellectual. It's more of a job type in France than it is in the US, but there are a few people perhaps that can say they were that in the US, like Neil Ferguson or Nassim Taleb or Malcolm Gladwell. The problem is the process for becoming that was like writing these 1 to 2,000 word op-eds in the New York Times and Washington Post, et cetera. I didn't like the process. So even though I kind of like the outcome, I realized the process was not compelling to me. That's not the way I like to write. I like to write about everything and anything on my blog without constraints. Sometimes it's short, sometimes it's long. So I realized it didn't work, so I didn't do that. And I kept trying these things. So actually, not only did I list all the things I wanted to do and get people's perspectives, I tried most of them. I tried to build a gathering point for entrepreneurs and intellectuals and thought leaders and in the Dominican Republic, kind of a Necker Island 2.0, but not for profit. That failed as well because of corruption in the country. And ultimately what I ended up doing, which is build FJ Labs, just was one of my 12 ideas or 9 ideas or 8 ideas, whatever I had, was keep investing in companies and keep building companies. And that kind of worked and took on a life of its own. And then people said, hey, I would like to invest with you while you're doing this. And it led to FJ Labs. But it's not as though I came up with like, let's build FJ Labs right after OLX. I actually tried all these things. Same thing with the personal lifestyle. Like I went down to 50 items. But then it was like, okay, sleeping in people's couches doesn't work because you're embedding, their life is not ready to support you because they have to go to work and bring the kids to school, et cetera. So maybe let's go on vacation with them somewhere. And where should that be? When should it be? What structure should it take? How many people should be there? Then I were like, okay, maybe I should split my time. I like, from a personal life design perspective, I like being in a city like New York because it's intellectually, socially, and artistically intense. But I also want to disconnect because I want to take the time to read and write and think. And so I want to be in a place like Turks and Caicos, where I am today, to be reflective, because if you're doing, you're not thinking. And so, but even then, what's the correct setup? Is it a week? Is it 2 months? And so I actually iterated and ended up with a month. But I didn't end up there. I didn't start there. I ended there. And so iteration in life design, you know, even thinking through, like, would I ever want to get married? And I'm like, you know, why, what is the point for someone like me of the institution of marriage? And I'm like, and why would I invite the state or the church or religion into a relationship when we can define ourselves that's in the nature of a relationship, you know? And so you can make your own, test it. And some things and that testing is something people don't do enough of in both personal and professional life. You can have more advanced. And then step 4, once you've done the iteration and you've talked to all your friends and you've thought through what you want to do, is actually take a step back. And what are the lessons learned? What have you learned along the way? What would you do differently next time? What are the things that you're still require iteration? And reflect on what has been learned along the way and build on it. But I think it's also important to take the time to be reflective. What worked? Why did it work? What didn't work? Like, some things I tried, failed, but the premise of trying them was correct. It was worth trying. It's not because you try and you fail that you should say, oh, it was wrong.
It could lead to something else.
Absolutely. I think it was fun and right to try to buy eBay and Craigslist, and frankly, to try to run part of Cuba. It didn't work out because it required other people's approval and they disapproved or disagreed, but it was still worth a shot. Let me finish on the books. So
yeah, I know you have to run, but go ahead.
I have to run, but I don't recommend most business books. I think they're boring and not that interesting. And look, I know I'm a super prolific reader, but I read, I'd say 70% of what I read is fiction. Most of that is like science fiction, fantasy, space operas, like fun stuff, like, you know, like Old Man's War by John Scalzi. In the nonfiction genre, I'm a sucker for behavioral economics and just very specific, or intense global philosophy, like Sapiens. You know, Sapiens is probably one of my all-time favorite books, which I would recommend everyone to read. And by the way, I think Sapiens is much better than Amadeus and his subsequent books, because he's a better, I think, analyzer of what has happened in the past than predictor of the future. He's too pessimistic. I fundamentally disagree with his pessimistic take in the future of humanity. I'm a profound optimist, which would be a conversation for another day. And then I guess recent books I'd recommend: Lifespan by David Sinclair, on how to lead a long, healthy life and increase your overall, how do you slow down your aging if you want. Why We Sleep by Matthew Walker, on how to improve the quality of your sleep. Now, of course, it's He selects the data. He overstates his case, but it doesn't matter. Understanding that he overstates the case, but most of these books overstate their cases because they kind of feel like they have to because of the pressure of publishers and to make a more compelling story. All of these things are not as nuanced as they should be. And I guess my favorite businessy-like book of related, Loonshots by Safi. I mean, how both large organizations can find a way to keep innovating and how organizations that are innovating can actually find sustainable businesses, I think makes a lot of sense. And thinking through what it takes to be able to do that makes a lot of sense. So love Loonshots, definitely one of my favorite books of 2020.
Check out FJ Labs. Check out FabriceGrinda.com. Check out Playing with Unicorns. Fabrice, thank you so much.
Thank you.
What I got, you can't buy. It resides between my eyes. Walked through the fire, came out better on the other side. See, life's like a beach if you find the sailing right now. I'm feeling like $100 grand.